Welcome to our last show of 2024, which means it is our time to do our annual fearless forecast for what the markets will do next year in the year 2025. This is, as I like to call it, our annual tongue-in-cheek exercise where we make our prediction for the year as to where the Dow Jones Industrial Average will wind up a year from now. This is an exercise that we've been doing on this program for well in excess of 35 years. Of course, the last 25 I was involved in. The prior 10, that was Jack Nelson, my father-in-law at the time. He was doing the radio program. We're going to tell you how we did this year. Right? So what's the scorecard say in terms of what our fearless forecast was that we did a year ago, and give you a little perspective on how we've done in this forecasting arena, plus give you, most importantly, our prediction for the year 2025. An important caveat, though, before we get too far into this, of course, we mention this as sort of a tongue-in-cheek exercise because, of course, hopefully you all realize that we can't actually predict the future. Nobody can really do that. So hence the tongue-in-cheek description of the exercise. Plus, for the holidays this past week, did you give a gift or maybe receive a gift of travel? Well, we're going to tell you about some new travel requirements that start as early as January if you're traveling to or through the United Kingdom, and the rest of Europe as well is going to have some additional travel requirements if you're an American citizen traveling abroad. So if you planned a trip as sort of a holiday gift this past week, or gave one to a loved one, or received one from a loved one, there's some extra things that you're going to need to do. So we'll talk about that in the program. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, and you're listening to Dollars and Cents on air now for almost 40 years, one of Central Florida's longest-running radio programs, coming to you on a host of stations throughout the Central Florida region. Also a top 25 financial planning podcast as well, so make sure you check us out on your favorite podcast platform, including our YouTube channel as well. To find all of that, just search Nelson Financial Planning or go to our newly redesigned website and you'll see a bunch of icons that will immediately connect you over to the channels on those various platforms. So what a year it was here in 2024, right? Beyond sort of the presidential election and the Fed starting to cut interest rates. Those are probably the big headlines for the year. There were a host of other things that happened that certainly impacted your money and the world around us. So let's not forget, at the beginning of the year, and I guess some of this stuff is still ongoing, right? So you've got the Gaza conflict that was front and center at the beginning of the year, and that one is still ongoing as Israel seeks to defeat various enemies of the state and serving as a pretty good proxy in some places such as Iran as well. In February, the SEC approved the first ETF that was linked to Bitcoin. So had a big introduction of Bitcoin, which was obviously a dominator of the headlines, a big introduction to Bitcoin in terms of being more available to the masses, particularly in the form of an ETF, an exchange-traded fund. SEC approved those back in February. Obviously, over the past several weeks, Bitcoin has rapidly increased. We've got some thoughts on that, but we're going to save that for later on in the program. Also, sticking in the first quarter of the year, there was that big real estate, the realtor settlement, which was widely expected to sort of change the fee structure, the compensation structure for real estate transactions. Not sure it really necessarily moved the needle a whole lot on that one way or the other. Throughout the year, this was an ongoing story. The conversation about banning TikTok, right? If you think back to kind of that implications that has, unfortunately, all too often, many people get their investment advice from TikTok, which probably not the best place. And so, but certainly there has been a concerted effort during the course of this year to ban it, given what the Chinese might be capturing in terms of the data and the information that is going through TikTok. Also, in the first part of the year, you saw the Francis Scott Key Bridge in Baltimore collapse when that container ship hit it. Similarly, the crypto kid Sam Bankman-Friedman wound up going to jail for siphoning off several $1 billion of cryptocurrency into his individual pocket. Ongoing discussions throughout 2024 that had to deal with providing aid to Ukraine. That certainly was an ongoing conflict, along with sort of the efforts to bring down inflation as well. Another main sort of topic here this past year. In May, actually, the Dow crossed the 40,000 mark for the first time ever. And then in June, NVIDIA, the big AI chip maker, became the largest U.S. company by market capitalization. So a lot of interest in AI, which was another sort of dominating headline this past year. Of course, in June, the ill-fated presidential debate for Joe Biden that caused him to step down the very next month, and the emergence of Harris as the Democratic nominee in July, which happened in July. July also marked the assassination attempt on Trump as well. My goodness, we're only halfway through the year, okay? Those are some pretty significant headlines that had some major impact on your money and the world around us. Also, of course, in July, the Paris Olympics. A lot of money was spent in France this past summer for the Olympics. September started the big shift on by the Federal Reserve. So the Federal Reserve did its first rate cut of the year in September. That really marked a pretty significant turning point, where you're going from a period of time where the rates were going up, and now the rates were going down. And in September, they kicked it off pretty strongly with a 0.5 point interest rate reduction across the board in terms of the interest rate cuts. That spurred a lot of money sort of moving or transitioning over the course of the year to a much more money market type of driven process. Leading up to that first rate cut, interest rates had sort of peaked at close to 5%. Most money market funds were getting around that level. And so you actually saw, from an investment perspective, nearly $7 trillion sitting in money market accounts at the end of September. So a tremendous amount of money just kind of sitting in cash. Of course, what has happened since September is there's been a 0.5 point rate cut starting in September, and then another Q1, and then another Q1 here most recently over the past couple of weeks. So that 5% you were getting in your money market, well, that's down to 4 pretty quick. So that's got some interesting implications as we think about next year. Next week's program, we're going to be focusing a little bit more on that. Some of the themes for 2025, and that's going to be part of that conversation in there. And so that gets us, where's that get us up to? Like September. We still got a quarter of the year left with all kinds of headlines still to cover. So we're going to take a break as we kind of recap some of the major headlines that happened during the course of the year 2024, and then get to our fearless forecast, and in particular, how we did for the year 2024 and what we're going to be predicting for the year 2025. So stay with us through the break here on Dollars and Cents with Joel Garris of Nelson Financial Planning. We're recapping the headlines as we kind of go through what is our last program of the year 2024, and the host of events besides the election and the Federal Reserve that certainly impacted your money and the world around you. In the first segment, I think we got all the way up to September and kind of hitting some of the highlights, and then October, of course, brought hurricanes here in Florida, which has a major economic impact, particularly for those that were impacted. We had a number of folks that needed to take extra money out of their accounts in order to account for some of the damage, particularly on the west coast of Florida. November, of course, was the election, the win by candidate Trump, now President-elect Trump. Also marked the second Fed rate cut of the year in December, and it's been a pretty busy December with the regime change in Syria, which obviously has, again, major implications for that area of the world. Also, if you're a Taylor Swift fan, her tour, Eras Tour, ended here in December, one of the most successful, or the most successful concert tours of all times after a 2-year run. Eras Tour ended, and then the Fed cut rates again for the third time this year for a total of 1%. And then of late, the big story over the past week or so, besides it being holidays and holiday season, is you got a bunch of drones flying around in New Jersey. No one can figure out what's going on with the drones. So that is just the litany of headlines. What's interesting about all of that stuff is that any one of those, except for maybe the end of the Eras Tour, could have had a big impact on your decision involving your money to how you ultimately invest it, how you spend it, although I guess probably the Eras Tour might have had that. The end of the Eras Tour probably did have that impact, because if you didn't go, you probably saved yourself a few grand of money. But those are just another year, right? Just a normal year where you have a litany of headlines that ultimately serve to impact what can happen to your finances. So being this being the last show of the year, it's time to get into our fearless forecast for the year 2025. Before we do that, let's recap how we did for the year 2024. And this year, we're going to pat ourselves a little bit on the back. Not too bad in terms of having reality, or what happened in the markets, particularly when we look at the Dow Jones Industrial Average, frankly, exceed our expectations for the year. If you recall our program from a year ago, and I know many of you do, because some of you will actually write it down and make sure that I'm being honest on what I say the subsequent year in terms of what I actually predicted for the year. So there's proof positive of what I said a year ago. Our prediction for the year 2024 for the Dow Jones Industrial Average was that the Dow Jones Industrial Average would close at about 41,500 on the Dow Jones Industrial Average. Dow today, now granted, there's still 2 more trading days left in the year, so we don't know exactly where things wind up. Obviously, next week on the program, we'll kind of dot the I's, cross the T's on this one. But the Dow hovering above 43,000 as of the original air date of this episode. Certainly, the markets delivered above our expectations for the year. So that's always good. That's always good when you have pretty high expectations, 41,500 at the time of the start of the year. That was seemed like a level on the Dow Jones Industrial Average that seemed almost unattainable over the course of the subsequent 12-month period of time, particularly in a presidential election year. But lo and behold, that's exactly what happened. And then some. Of course, the reality is that this year corporate earnings were stronger than expected. It always comes back to businesses making making money that helped ultimately over time drive the performance of the stock market. And then a little bit of a more aggressive, sort of at least initially, push by the Federal Reserve to cut rates. All of that led to the markets performing well this year, and certainly nice to see that our expectations were exceeded. So, as you know, though, we think about our fearless forecast for the year 2025. We'll take a moment to reflect on our track record, which, as you might expect, since it involves predicting the future, is maybe spotty at best. Over the course of the past 10 years, it's not been too bad. 3 of those years, we were actually within a couple hundred points as to where the Dow Jones Industrial Average closed at for the year. Not too bad on that. For the other years, it was kind of an even split, and I've got historical data on this going back 20 years, kind of evenly split between the market sort of exceeding our expectations and then the other half of the time not really beating our expectations. So I guess our track record on our feelers forecast is okay, certainly not wildly wrong, but certainly not perfect either. And of course, one other caveat, our fearless forecast limited to the Dow, because we've been doing this for so long that while other indexes like the S&P 500 have become sort of better gauges of the overall market, the reality is that they were not as well known as they are now versus when we started doing this exercise 30 odd plus years ago. So we started with the Dow. We'll stick with the Dow. That's kind of our approach in terms of our fearless forecast. So as we get to close to closing out the year, 41,500 was our prediction. The Dow is around 43,000, so always nice to have our expectations exceeded. So now we'll pivot. So let's start thinking about 2025 and what our fearless forecast will be for the year 2025. Before we give you the actual number, we always like to take some time and sort of talk through what's on our minds, what we think is going to happen, what our expectations are going to be for the year. Share some of those thoughts as to what will be what we believe will be sort of the main drivers for the year 2025, and how those headlines and events and things like that will ultimately impact the market and where it winds up a year from now. So I'm going to start with kind of what worries me the most, or maybe the things that worry me as we go into the year 2025. Not so much anything overly specific. I mean, certainly the volume of global hotspots is troubling. And of course, if any of those global hotspots right around the world get hotter, that could certainly dramatically impact your money in and the economy for the year 2025. I mean, one of our I guess our chief concerns that might not be one that you would hear regularly is sort of the amount of financial silliness that we see a little bit out there today. That's probably the piece that concerns us. And we're going to explain exactly what we're talking about on that, but we need to take a break. So stay with us through the break. This, of course, is Dollars and Cents with Joel Garris of Nelson Financial Planning. On the program, we are, since this is our last program of the year 2024, it's kind of a weird week, right? You got the 2 trading days on Monday and Tuesday, then Wednesday is the January 1 holiday, so the markets are closed that day, then the markets reopen in the year 2025 for the Thursday and the Friday. So, as is always the case, we always like to give a clean, fearless forecast for the year 25 without knowing what has gone on in the markets for any amount of time. So that's why we do the fearless forecast on this program. And then the next program, which will be our first program of the year 2025, we're going to talk about some of the investment themes to be aware of for the year 2025. So as we get down to making our fearless forecast for the year 2025, I always like to kind of think through some of the things that sort of catch our attention. And as we were saying before the break, the number of global hotspots seems like there's a number of them, that if any of those gets hotter, then obviously that's going to have a dramatic impact on the economy, the markets, your finances, all of those kinds of things. At the same point in time, we also like to kind of think about the broader picture as we look ahead to 2025. And one of the things that concerns us as we close out the year 2024 is sort of the amount of, and I guess I'll call it financial silliness, that we see today. Another way to think of it is sort of a loss of perspective about what risk is, and our concern of when we see that there's always then a sort of a return to reason that kind of typically happens, that then involves the value of those things that have really kind of gone up for no real explanation, rapidly declining. And if there is a spillover effect, and sometimes there is, then that's going to have a broader economic impact. The classic example is what we saw in the year 1999, preparation for Y2K. If you had .com in your business name, many companies did and didn't really have a business plan, let alone revenues or heaven forbid, profit, then as long as you had the .com in your name, people thought your company was going to be incredibly valuable. So prices for those types of companies were bid up pretty dramatically. I remember going to the old Citrus Bowl, and now it's called whatever it is these days, Camping World Stadium, I guess. But going to the old Citrus Bowl, it is January 1 of the year 2000, so we managed to survive Y2K. The planes didn't fall out of the sky and all that stuff. And so you go to the game, and you got a hat. They were giving the hat as the free item, and I actually held on to that hat because the Florida Gators were playing in that game, and my wife had gone to the University of Florida, so that by marriage made me a Florida Gator fan. And so I said, I have a Gator hat. On the side of the Gator hat was the emblem for that particular bowl game. And so in that year, it was branded the Outdoor.com Bowl. You ever heard of Outdoor.com? Yeah, I didn't think so. Didn't exactly last. Those are the kinds of things that catch our attention. When prices run up as money chases the allure of a promise that winds up being clearly illusory. And I'm seeing that same type of ignoring the risk of what it means to invest in certain pockets of investments. And I'm not kind of talking about the large cap growth of the FANGs or any of those. Those have been dominating the markets. The reality is that while those companies their price may be much higher than you would expect, they actually do make a product and provide a service and actually have revenues and profits and things like that. But I'm talking about those types of assets where they don't have that, much like the .com era of 1999. And if you lose perspective on that, or if you see larger and larger parts of society sort of losing perspective, the reality is you're going to do so at your peril. And more specifically, let me give you kind of three different examples of things that we've seen over the past probably several months that really kind of caught our attention and made us think about this. I don't know if you saw any of these stories or not, but the first one has to do with that piece of art, right? That was like a banana that was duct taped to like a bulletin board, okay, or whiteboard kind of thing. That piece of art, quote unquote, sold for $6.2 million, and the purchaser of that piece of art, promptly took the banana and ate the banana. Paid $6.2 million for it. You see, you hear stuff like that, and you kind of say, that's kind of weird. And then the story continues. $9.3 billion. We mentioned Bitcoin ETFs earlier in the program. The SEC approved those back in February. $9.3 billion has flowed into Bitcoin ETFs in the past 45 days. Guys, I'm still in the camp of the emperor has no clothes on that one. If you don't know what the emperor has no clothes is, it's a kid's book. Read it. It's got universal application. The most troubling one out of all three of these sort of things that have floated across my desk is, and I kid you not, we're doing this with a straight face, there is a crypto-based coin called Fart Coin. Yes, you heard me. The total market value of Fart Coin is $565 million. To put that number in perspective, okay, that valuation of something that clearly doesn't have any value at all, that is a greater valuation on Fart Coin than 38% of the publicly traded companies in America today. That are actually, those companies are actually, delivering some form of good or product or service that people are using. All of these things, folks, concern me in that we've seen it a lot over the 25 years we've been doing this. And whenever risk starts to be ignored, and it starts in little pockets, kind of like this, the art world, or some ridiculous crypto coin called Fart Coin or whatever. People start believing that when people start believing that things with no actual value start to have fantastical values, then at some point the music is going to stop pretty quickly, and potentially that spreads a la the dot-com era of the late 90s, and potentially that spreads to impact broader parts of the economy and the markets. So that's number one. Number two is I also worry about a return of inflation. I don't think inflation has necessarily been fully vanquished by any stretch of the imagination, particularly if we have a higher level of deficit spending by the federal government. Then you could wind up having a return to inflation. So those are kind of the things that weigh on me, that concern me as I think about what the next year, 2025, will be. But there's also some stuff on the flip side that leaves me optimistic, or I guess cautiously optimistic, for what the year 2025 will hold for us as investors. So here in the last segment coming up, we're going to end with those positive things that ultimately help to provide the basis for our fearless forecast for the year 2025. Coming up next here on Dollars and Cents with Joel Garris of Nelson Financial Planning. We're back here on Dollars and Cents. Last segment of the program, we're going to give you our feelers forecast for the year 2025. Prior segment, we were talking a lot about kind of the things that weigh on our mind that concern us as we think about the year that is about ready to start in the year 2025. But in this segment, we're going to talk about the flip side of that and some of the reasons why we continue to be optimistic, maybe cautiously so, might be a good word to describe it. But on the other side of the spectrum, and this is a story that, as we were recapping some of the headlines for the year 2024 earlier in the program, this is a story that I think is going to continue to dominate, and that's the story about AI and its potential applicability, not potential applicability, its applicability to have a significant impact on increasing productivity, which if you increase productivity, that actually helps to offset inflation. So the AI productivity boost could certainly directly address one of the concerns that I was talking about in the last segment about, is there going to be a return of inflation? And so ultimately, I do think that the productivity boost from AI sort of wins out over in inflation because the implications of that are just really being understood and utilized by businesses. We certainly use AI at the office in various ways, and I can already see where there's been significant changes in the amount of time that it takes to do a particular task if you're using AI properly on that approach from a business perspective. And then, of course, the obvious results of the presidential election leading to a continued lower corporate tax rates, or at least rates that aren't going to necessarily increase. That obviously helps in terms of corporate earnings. Corporate earnings certainly are a big part of what ultimately drives the market. And so that's a pretty good combination when you're talking about lower taxes or maybe continued lower taxes plus less regulation. Obviously a pretty good combination for businesses to help ensure more profitability, which kind of gets to the earnings expectations. The earnings expectations for the year 2025, corporate earnings are expected to grow by 15%. So that's a pretty significant corporate profitability growth rate. And certainly as we think about the Fed, while the Federal Reserve might be sort of slowing down its rate cuts, it's still on the cutting side, which is much more accommodative to economic growth. So with all that said, positives, negatives, as we think about what risks and rewards, if you will, as we think about the year 2025, I suspect that many of these more positive themes will continue to carry very strongly in the first part of the year. We've certainly seen that in the back part of the year 2024, where themes of AI and the potential of lower corporate tax rates, less regulation, all corporate earnings, all of that helping to ultimately drive the market quite well. And we would expect that to sort of continue into the first part of the year. We think there's probably a carryover, spillover impact, if you will, of all of those that we'll see play out in the first part of the year 2025. A lot of positive energy out there, significant risk appetite as well, which frankly can push the markets higher, but also is a source of concern, as we were talking about earlier in the program. And that kind of gets us into the second half of the year, where we think that there's going to be a bit of a return to volatility, and ultimately sort of a rationalization of kind of all of these different all these issues and topics. Certainly not going to be another year where you're making 15 to 20% if you're tracking the overall market. By mid-year, you could see kind of the markets floating up, and then back half of the year just kind of languishing. But by year end, there will be, I guess, more muted. So I think I am going to stick with, in terms of our fearless forecast for the year 2025, we're going to stick with a nice round 45,000 on the Dow. That's a figure that we actually sort of tossed out as we were starting to think about this in an email this past week to our clients, and sort of our Happy Holidays email. And I said I was going to keep thinking about it, and I kept thinking about it over the course of the past week. And so I think that's our number. Lock it in, as they like to say. Our fearless forecast for the year 2025 is that the Dow will end the year at around 45,000. Not an overly strong year. Expect more strength in the first part rather than the second. One that will probably start strong, and maybe you could see the Dow up to 46 or 47,000 at the midpoint, but ultimately finishes with a whimper, so to speak, because I do think that there's some headlines out there that are going to kind of suppress things, particularly after a couple of years like what we've seen, where the markets have rallied pretty strongly. You don't really typically get 3 years in a row where you're talking 15 to 20% in terms of the return. So that's the practical aspect of it. So lock it in, if you will, and tune in a year from now to see whether our fearless forecasts met our expectations, exceeded our expectations, or disappointed our expectations. Next week on the program, we're going to talk an awful lot about some of the themes, some of the investment themes to be thinking about. We've kind of touched on a little bit of them along the way. Lowering interest rates, for example, may mean that sitting with as much money in money market might not be the best possible solution for the road ahead, particularly as the Federal Reserve starts to cut rates. Thinking about corporate earnings, lower corporate taxes, things like that, that ultimately will have play an important part of what happens in the year 2025, along with this continued development and immersion, if you will, in AI and the role that that is going to have on productivity. So that's what we're going to really be kind of focusing on in next week's program. We talked about this at the top of the show. We're going to have to talk about it more next week because we're starting to kind of run short on time on this week's episode. But new travel restrictions. If you gave someone the gift of travel, or maybe you received the gift of travel this past week during the course of the holidays, there's some things that you need to know before you grab your passport and hop on the flight. Throughout a lot of places in the world, there are now requirements to register ahead of time before you even get on that plane. And starting here in a couple of weeks, the first one that is doing it, that people would be most familiar with, would be the UK. So if you're traveling to or through, it applies to transit customers as well, where I've just got a little stopover in the UK, and then I'm grabbing another flight to someplace else. There is a registration requirement, and that is something that you will need to make sure that you do in order to travel successfully throughout the UK. And then those requirements expand even more so for the rest of Europe by about mid-year or so. Those are the expectations of what that timing is supposed to look at. So the next week on the program, we're going to talk a little bit more about this topic in detail. We mentioned at the top of the program, we wanted to make sure to mention it here as we close out the program. But we'll get into a little bit more detail on it next week so you can get a better perspective. Bottom line, though, if you're traveling, you got to start, registering, filling out websites, uploading pictures and passports and blood types. Not blood types, I kid you, but you get the idea. It's a lot of information. Anyway, we're going to wrap it on up. Thank you for listening to our program during the course of the year 2024. We are excited for next year, 2025, because I know that there will be a host of topics that we can only imagine what they might be as we sit here today. But our job, as always, is to keep you informed and updated on the latest changes, particularly those that impact your money and your finances. So with that, don't forget to visit our website, nelsonfinancialplanning.com, and schedule an absolutely free conversation to set those goals for the year 2025 and get off to the right track in the new year. This is Joel Garris of Nelson Financial Planning. Happy New Year.